And on Wednesday, bonds were mostly flat in the overnight session and refused to follow the 3 to 5 basis point rally in European bonds. The 9:30 a.m. NYSE Open had brought about a few sellers, not the craziest thing in the world given the prevalence of bond-related ETFs and other trade flow considerations surrounding any major marketplace opening and closing. We are starting to see a slowdown in consumer spending as the Fed's drastic tightening cycle begins to gain traction on the economy. Yesterday, Home Depot reported weaker earnings, particularly on big ticket items like grills and furniture. Although after you buy all that stuff, you don't really have to come back and rebuy it. So with the expansion in housing, people probably just already have that stuff. Today, Target reported first quarter earnings and forecasted low single-digit comps for the rest of the year. Consumers are buying more non-discretionary items and buying fewer discretionary items. This comports with studies that show that consumers are saving more amidst the fears of a recession. Housing starts came in at 1.401 versus 1.405 forecast. Building permits came in at 1.416 versus a 1.432 forecast. Housing starts rose 2.2% month over month to a seasonally adjusted annual rate of 1.4 million. This is a 2.2% increase from March, but is down 22% from a year ago. Building permits fell 1.5% month over month and 21% to a seasonally adjusted annual rate of 1.4 million. Single-family starts rose 1.6% last month at a 846,000 pace, but March was revised lower by 2%. Single-family starts are down 28% year over year. Come on. I mean, what are you seeing? Come on. Build some houses. Fed futures help tell the future of rates, and right now sentiment is weakening. The chances of a Fed rate hike pause in June down to 75%. The speculation of rates at 5 or even 5.25 in July is growing. Phrases like hurry up and wait or ho-hum day have been increasingly prevalent in our commentary of late. This is a byproduct of the present plight on the bond market. In short, we can do nothing but wait for clearer trends to emerge in terms of growth and inflation. Until then, the stakes are high enough that it doesn't make much sense to stray too far from wherever it is or has been without new information. The 10-year bond yields are within arm's reach of 3.5. Today was just another day in that regard. MBS ended basically flat at plus 2 basis points. Stocks won the day, being up 48 points at 100.41. That puts the bonds right in the middle of this range. We got a new Fibonacci line there at S1 retracement of 100.281, which kind of gives us a different range, but it's still a lot of room to drop. But there's a big ceiling on the upside with 3, 4, 5 lines converging upon each other, which is going to be a tough ceiling. So it's just kind of hard to say, to look at something and go, we should float because they're going to get better pretty soon. Without new data, it's hard to predict that.